Hey everyone, welcome back to AI Market Pulse, your go-to place for daily stock market insights powered by data, analysis, and AI. Disclaimer. This video is for informational and educational purposes only. I'm not a licensed financial advisor. Everything shared here is my personal opinion, not financial advice. Please do your own research before making any investment decisions.
Welcome to a new deep dive. You sent over some really interesting info today. We've got recent market moves, some potentially massive global finance news, and closer look at a couple key stocks. So our mission, as always, is to unpack all this and figure out the core insights for you. Where should we kick things off? Maybe the closing numbers for the indices.
Sounds like a plan. Let's start with the S&P 500. It finished at 5,892, which was up just 0.1%.
Okay, barely moved.
Right, but what's kind of interesting, technically speaking, is there isn't really clear resistance until you hit that 6,000 mark. That's generally seen as pretty bullish.
But there's always a but, isn't there? Yeah, usually. Yeah, there's some downside risk. We've got those open gaps, price levels that weren't fully traded, hanging around 5,660.
Ah, right. Those can sometimes pull the price back down.
Exactly. So it just underscores why having stop losses in place is, well, pretty crucial for managing risk.
Makes sense. Protect that downside. What about the NASDAQ? Tech has been the story for a while now.
It really has. The NASDAQ 100, the QQQ, climbed 0.6% to close at 518.66. It's getting close to resistance right around 520.
Okay, so a key level to watch there.
Definitely. If it breaks through 520 convincingly, that would be, strong bullish confirmation. But like the S&P, there's also an open gap below, down around 490.
So strength, but potential support levels underneath need watching. And the Dow, how did it fare?
The Dow was pretty mixed. Ended up relatively flat, really.
So not quite the same enthusiasm as in the tech space.
It seems like it. Suggests maybe the moves were more concentrated rather than a broad market lift.
And what's the overall vibe? The fear gauge? The VIX?
Still heading down. It's under 20 now, which typically points to low fear, improving sentiment, maybe a bit more risk appetite creeping back in.
Okay, that aligns with the market action, like the S&P climbing back.
Yeah, the S&P actually managed to erase its losses for 2025. That's pretty significant. It seems like solid earnings and maybe some macro stability are helping things along.
Right. So looking at sectors, you mentioned tech was strong. Where else did we see movement?
Tech was definitely the top performer. Again, it's that AI story, the chip stocks.
Yeah.
NVIDIA and AMD were both up nicely.
No surprise there, seems relentless. Any areas lagging?
Healthcare is lagging a bit. There's still some uncertainty hanging around about potential drug pricing legislation, which seems to be weighing on the sector.
Got it. Okay, so tech leading, healthcare lagging slightly.
Yeah.
Let's dig into some of the bigger headlines and events. What caught your eye?
Well, on the earnings side, NVIDIA really stood out. A breakout day, shares up over 4%.
Wow.
Yeah, it's just continued strong demand for their AI chips. Plus, they announced some new strategic partnerships.
They just keep delivering. Anyone else?
Supermicro also had a sharp jump. Again, AI-related announcements and some pretty strong forward guidance seem to fuel that move.
The AI theme is just everywhere. What about economic reports? Anything significant there?
The big one was inflation data. It came in showing slower price growth than expected.
That's key.
Huge. It really helped calm those persistent inflation fears. That definitely drove some buying, especially, into those growth-oriented stocks.
Right, take some pressure off the Fed, maybe?
That's part of the thinking, yeah. It feeds into the Fed watch narrative. Expectations are growing that maybe we won't see as many rate hikes, or perhaps hikes will be delayed given the slowing inflation and stable economic signs.
Okay. Any other major news? You mentioned global financial developments earlier.
Yes, a couple of things. There were reports about a potential temporary truce in the U.S.-China trade situation.
Oh, that would be positive.
For sure. Any easing of those global tensions tends to push markets higher. But the really potentially massive news involves future investments.
Go on.
There are reports circulating, and these numbers are, frankly, staggering. That Saudi Arabia is planning to invest around $600 billion.
Billion, with a B.
$600 billion in areas like security, tech, AI, chips, servers, energy, even nuclear.
Wow. Okay, that's enormous.
And it doesn't stop there. There are also reports suggesting Qatar might be looking at potentially investing $1.2 trillion in similar areas, plus more aircraft.
Wait, so add those up. That's $1.8 trillion in potential investments.
That's the reported figure. Now, even if these numbers are estimates or approximations, the scale is just unprecedented.
Absolutely unprecedented. And the focus of security, tech, AI, chips.
Exactly. It's a major signal, potentially, of a strategic shift for these Middle Eastern nations moving heavily into technology infrastructure, especially AI. It's not the kind of sector focus we might have historically associated with them on this scale.
So what does this mean for the markets if even a fraction of that capital gets deployed?
Well, the thinking is that U.S. tech companies would likely be major beneficiaries. They have the leading edge in a lot of these areas, especially AI and semiconductors.
Makes sense. So how might someone, think about this from an investment angle?
The source material we look at suggested a few approaches. Broadly, the S&P 500 for diversification, maybe the NASDAQ for a heavier tech focus.
Or specific stocks.
Or specific stocks, yeah. But that obviously requires much more active trading, analysis, managing risk. It's a different ballgame.
It really highlights how central this AI revolution is becoming on a global scale, doesn't it? Nations seeing it as crucial for tech and security.
Absolutely. And, speaking of market dynamics, the source mentioned Boeing as an example of how, even with big trends, individual company issues can cause volatility.
Right, important to remember.
And also that China apparently increased orders for aircraft, despite all the tariff talk, shows how complex global trade is. Sometimes immediate needs override the bigger picture stuff.
True. Now, shifting gears slightly, there was some M&A news.
Yeah, Dick's Sporting Goods potentially acquiring Foot Locker. The report mentioned a possible price of $24 per share.
And Foot Locker stock reacted how?
It surged, up something like 65%. Huge jump.
But there's a catch, right?
Always is with acquisition rumors. If the deal doesn't actually happen, that stock price could fall just as quickly. It's a risk.
And that Foot Locker story, looking at its history, it kind of highlights the importance of trading discipline.
Exactly. The source used it as a prime example. The stock used to be much higher. If you didn't have stop losses or an exit plan on the way down, well, it shows the potential damage. Really reinforces that point about using stop losses we made earlier.
Yeah, definitely. Any other interesting tidbits from the sources?
A few minor things. HBO Warner Bros. Apparently changing logos again. Costco partnering with a firm, the Buy Now, Pay Later service.
Could impact retail.
Maybe. And maybe more significantly, the sheer number of companies with a $1 trillion market cap has jumped from just one back in 2019 to 11 now.
11? Wow, that's a massive shift in market concentration.
It really is. Shows the dominance of these mega cap names. Many of them in tech, obviously.
Anything else on the tech front?
Yeah, CoreWeave, ticker CRWV. They provide cloud infrastructure, basically renting out GPUs, heavily used for AI. They reported strong results, strong demand.
So more evidence of the AI boom continuing.
Seems like it. Though, interestingly, their stock was apparently a bit volatile after hours, even with the good news. Just shows markets can be complex.
Always something to keep you on your toes.
Yeah.
Okay, so looking ahead, what should we be watching for?
Definitely keep an eye on Wednesday. Fed Chair Powell is scheduled to speak. Markets will be parsing every word for clues about rate policy.
Right, Powell's always a potential market mover.
Then Friday, we get the jobs report. Another key piece of economic data gives us a read on momentum.
And earnings season isn't over yet?
Not quite. We still have some big names coming up, like Apple, Microsoft, Tesla. Their results and outlooks will be important.
Okay, and broader factors influencing things.
Well, Fed sentiment on rates remains key. Can the tech rally keep going, or is it due for a breather? Oil prices are always a factor, especially for inflation. And of course, how long does this AI hype continue to drive the mega caps?
And you mentioned another inflation report coming up.
Yeah, the PPI, the Producer Price Index.
Yep.
That gives us a look at inflation from the producer or wholesale side, so it's another important data point.
Lots to track then. So let's try to wrap this up. What are the main takeaways from this deep dive?
I'd say number one, signs of cooling inflation and maybe easing trade tensions are providing some support for the market. Number two, tech, especially AI-related stocks, remains incredibly strong.
Right.
Number three, those reports about potentially enormous investments from Saudi Arabia and Qatar are something to watch. Could have huge implications, especially for U.S. tech, if they materialize.
And the importance of managing risk.
Absolutely.
Yeah.
Considering both the big trends and specific stock stories, but always being mindful of risks and using tools like stop losses is key.
Great summary. Okay, here's a final thought for you, our listeners. Given the scale of these potential investments we discussed, and just the crazy pace of change in tech and AI, what new opportunities or maybe unforeseen risks might pop up in the next few years that we aren't even thinking about yet? Something to ponder. Thanks for diving deep with us today. If you found this insightful and want to stay on top of the latest market analysis, don't forget to like and subscribe so you never miss an update. We're always exploring new angles, so let us know in the comments if there are specific areas you'd like us to unpack in future deep dives.